He's chief executive of WPP, the world's largest advertising and marketing services group. Martin, welcome to the Inside Track.
Good morning. I mean, to start off with Nouriel on Skype, that is even worse. I mean, it's sort of like a horror movie.
Well, what he's talking about, though, is something critical to your business and your view of the world, which is whether or not we're going to get into a recession. And as Betty was just saying, one of the key ingredients to a recession is a lack of confidence. We're seeing confidence evaporate from public financial markets right now. Are you seeing it evaporate from the corner office?
Simple answer is no, not yet. But I mean, it's a very early days. But Nouriel shifted his position, actually. You know, a few months ago, he was saying things were getting a little bit better. His tone was a little bit better.
He's been known to shift his position before.
But what we see, as I was saying to Peter just in the break, the US certainly has slowed from last year. We saw the dead cat bounce, or what looks like a dead cat bounce last year. Western Europe, interestingly, from very low levels, actually is showing some signs of improvement, but it's at very low levels. Asia and Latin America continues to be on fire, with the exception of Japan, obviously, and the Middle East. But Latin America is extremely strong, actually the strongest part of the world. Brazil probably showing signs of overheating, in my view, but extremely strong. So basically, it's a bit depressing to see, equity values slump by 10, 15, 20% in a couple of weeks. I certainly don't think that WPP is worth 15 or 20% less than it was a few days ago. However, the seriously worrying thing is that the markets seldom get it wrong, certainly in terms of judging equity markets, and it may well be that if it's not a double dip, that we'll see a significant slowing. Having said that, we always thought it was going to be a hard slog. The paradigm for this, or the comparison to this, is 1929 and the 30s, and it took us a long time, certainly in the Western world, to get out of it in the 30s, and that's what's happening again. This situation just exhibits total lack of leadership, political. We had our board meeting, WPP board meeting, in July, the week or a few days before the so-called deal was done, and obviously the deal wasn't big enough, and that's what the downgrade is about, and that's what the current events are about. So I think we saw this coming. The implications are serious, however, because will people hire? Will consumers buy domestic appliances and cars, given what they read, given what they hear on Bloomberg or wherever else? The answer is probably no. It'll make them more cautious than they were post-Lehman, because post-Lehman, the Lehman event really brought fear into the boardrooms. People were worried they were going to get out of business within 24, 48 hours.
Martin, let me just take a break for a moment to bring in my colleague Betty Liu, who is down at the New York Stock Exchange. Betty.
Thank you, Erik. Sir Martin, I want to get into the advertising background, because, as you say, is it going to affect consumer confidence? How is it going to affect the way CEOs look at what to do with their business? I mean, so many of them have so much cash on the sidelines. Is this going to then mean a pullback for the global advertising market? Are you going to see a lot of companies continue to hoard more and more cash because of that sentiment?
Well, it's interesting. There's not a contradiction between holding cash, Betty, and investing in brand. In fact, actually, the two probably are synchronous. And the interesting thing is, with the $2 or $3 trillion that's sitting on corporate balance sheets, particularly post-Lehman, I mean, there's been a focus on cost. One of the interesting things is, ex-chairman Greenspan often talks about this. You've seen very little fixed capital formation in the non-financial sector since Lehman. Why is that? Fear of making mistakes. And what people are doing is, instead of investing in capital equipment and capacity, they're investing in brand. So there's not necessarily a contradiction. I mean, we're seeing very strong results still from the media companies, certainly in the United States. Not so much from Western Europe, which is the reason you've got this sort of dichotomy between valuations in the media sector between the US and Western Europe. So don't think, I think, because you've got high corporate liquidity, that means that ad spending will be under pressure. The more important thing is that capital investment spending will be under pressure. And given what Erik and Peter and I were just talking about, I think that will continue to be the case. So it's not necessarily terrible news for us, but obviously it does undermine confidence of both corporates and consumers.
The financial market's probably a little more nervous right now about Europe than the U.S., but you're saying it looks like the business confidence is a tad higher in Europe. What do you attribute that to?
Well, we saw the dead cat bounce last year. We were surprised by the strength of the U.S. media markets. That was a lot of that to do with some categories. Your own category of financial services, automobiles, travel, retail came back. That's moderated. But what happens in the U.S. usually is followed by what happens in Western Europe 6 or 9 months after. And the thing about Western Europe is we're starting from very low levels. The irony about all this is that when we look at UK economic policy, the coalition policy, it looks like it was a better policy than the US and than the Keynesian US response. Both have resulted in low growth. You remember the Keynesians said we'll get better growth in the US. Well, that hasn't happened. And so I think Cameron and the coalition are looking in better shape, but obviously it's still very difficult and we have to deal. The ECB's action, it was helpful early with the markets, although it's tapered off now. But valuations, look, I'm just, what do I know? Nothing is the answer to it. But it seems to me that corporate valuations are ludicrous now.
Martin, thanks so much for being here. Sir Martin Sorrell.
I hope they're ludicrous.